All right, so right now we have a stock that's currently up 75% this morning, which is a pretty nice squeeze considering that pre-market, the gap scanner was totally dead. In fact, I was wondering if I was even going to break the ice today with a single trade, but I did, and it was a solid day. And although I didn't hit my daily goal that I typically have set for myself, which is $5,000, if you recall, at the beginning of this week, after a really nice day on Monday, I said at this point, if I can just keep my head down and stay focused, I have a chance at hitting a $100,000 month for the month of July. Currently sitting at $73,000 of profit for July. My record was for the year was in February with $131,000. So I said, look, given where we're sitting for the month of July, and I'll just go back up here to the calendar, if I can just maintain an average of $3,000 a day for the rest of the month, well, we've got 9 trading days left, 10 if you include today. So that's 30 grand, 3,000 a day, right? That's going to put me over $100,000 for the month. So although my typical daily goal is 5,000, because I've had such a strong start to the month, I kind of also wanted to recognize that if I just focus on hitting some base hits, I'm going to have a really solid month. Now, of course, if we end up seeing some big opportunities, I'm going to step up to the plate and I may end up having a couple more $8,000 or $10,000 green days, and that'll help put me over that $100,000 mark. But even if I don't, even if I stay focused just on these base hits, I could still finish the month in really great shape. So today, when I first sat down, well, we could see right now Silo is our biggest percentage gainer on the day. It's up currently 78%. 46 million shares of volume on a 2.65 million share float. The stock is moving up with a catalyst, and I did trade it today. It's not actually my biggest winner, but I broke the ice on it maybe a little bit late in the move and was able to capture some profit. We'll talk about these yellow lines that I have drawn and how I was able to use those to help me establish areas where I thought we had a high risk of a false breakout. So we'll talk about Silo in a second, but let's go back to the beginning of the day and the very first trade, which was on SYTA. So SYTA, I'll show you my P&L here. So sitting at $3,341.12, not bad. SYTA first trade of the day, 363 bucks. All right, so this stock that, well, by the way, so when I first sat down this morning, let's see if I still have the scan on my phone here. I do. So when I first sat down this morning, I guess it's a little hard to see from that view, but the leading gapper was only about 47%. We had really small gappers, and I just kind of thought, gosh, this is not this is not looking great. So the leader was CHUY, but this is a buyout, so it's trading sideways. And then the second leader, well, now it's just updated to current. But anyways, so I sat down at 7 a.m. and unfortunately there was really no trade at the top of the hour at 7. But SYTA did start squeezing up here. As you could see, at 7 a.m. it popped up to about $1.05. It drops back down to 80 cents. Then it rips back up to $1, dips down, and squeezes up right here. Cheaper stock, not the price range I typically like to trade. But again, beggars can't be choosers. And I guess you could say in this market, anyone who's trying to make money to the long side feels like a little bit of a beggar because the market, just these last 2 days, has been a bit slower. So on SYTA, let's see. The trade was at 723. So where was that? So, all right. So right in here. So this is where I took a trade. We broke over $1. We then got this little dip right here, and we got this pop up to $1.02, $1.03, $1.05. And, I punched it with 15,000 shares, which is higher than my 5,000 share cutoff that I mentioned yesterday, but it's a penny stock. It's a cheap stock, so total risk is not a lot of money. Anyway, so I took that trade, and as you can see, I only made about 2 cents a share, $363, right? In at $1, out at $1.25 average, something like that. So it's like, all right, I guess I broke the ice there, but, lest we forget, what are we going to talk about here? Fees and commissions. So 15,000 shares times 0.003, it's about $45 to buy and another $45 to sell. So that's $90 in commissions on that first trade alone. So 363 minus 90, we've got, sorry, 273. So approximately $273. And, that's not an insignificant percentage of the profit. I don't like having 20% of my profit go to fees and commissions. However, this is a broker that I've been using for a very long time. I mean, I have negotiated a pretty good commission rate with them, although it doesn't apply on the ECN fees. But I like the platform as a tool. I feel like it's quick. I've gotten to really comfortable using it. Like, it just works well for me for my workflow and everything, like the way I trade. I've tried using other things and I just haven't been as happy with them. So anyways, I pay a little bit of a premium for it, but it's a tool that I like. So yeah. So anyway, I am definitely aware when I'm trading these low price stocks that commissions become a disproportionate percentage of the profit if I'm only making 1 or 2 cents a share. Essentially, the way I figure it is that, generally speaking, if I factor that my first penny of profit is fees and commissions, that's probably fair, right? If I take 10,000 shares, buy and sell, it's $60, right? So that's a 6/10 of a penny, but still, you get the idea. So just as kind of a rule of thumb, I just figure the first penny is going to fees and commissions. So if I'm making 4 cents, then 25% is fees and commissions, right? If I'm only making 4 cents on average. If I'm making 20 cents or 50 cents, well, then I'm totally fine. It's negligible. It doesn't matter at all. If I'm making only 2 cents, then we've got a problem. I'm splitting the profit with the, commissions, fees, and the broker and the exchanges. So only got that one trade there. My retirement account on SYTA, $363. Was like, all right, broke the ice, but let's see what comes next. So then the next one was BCTX. So you'll notice that I actually didn't trade BCTX. No trades on it. This one hit my scanners. And I looked at it and I was like, I'm not sure. So let me help kind of walk you through how I make that call if I'm not sure as quickly as I do. So on BCTX, it pops up on my scanner, goes from 80 cents or 90 cents, $1 up to about $1.30 really quickly. So now immediately there's the first thing I'm noticing when something hits my scanner. I noticed the price and the float. The float's 16 million shares, which is just a little higher than the stocks that have been giving me big moves in the last couple weeks. The big moves have been on stocks that have been more in the, on price range, more between 3 and 8, and in float range under 2 million shares. So already I'm thinking, not perfect from price perspective, a little high on the float perspective. It pops up, it drops down, it comes back up to 35. And I'm like, I don't know. It pops up to 40, 45, and then it starts to sell off. So I didn't end up trading it because I just felt like the float and the price combination wasn't quite right. And then NKGN hits the scanner, and this one I did trade, and it's my biggest winner of the day. So NKGN hits the scanner, and I have this similar thought process. I'm like, it's 11 million share flow, and it's also a cheap stock. I'm not really sure about this one. And also BCTX just failed. So like that makes it even worse. But it comes up here to $1.40. It pulls back, hits $1.50. There's a seller there. Then it comes back up. And when it broke over $1.50, I said, you know what? All right, we're holding $1.50. And I bought right here on this micro pullback. So I got in at about $1.55. Stop was $1.50, 5 cents stop. And we ended up getting a break here to $1.65, $1.70. That was not bad. So I took some profit on that. That was a 10,000 share position in and out. So about $1,300 or $1,600 of profit. And I also got a dip on it down here where I added back off $1.50. We popped back up to 60, which doesn't seem like a lot, but on a 6,000 share dip trade, that added a couple $100. So that was NKGN. So I was like, all right, that was nice. I can't complain too much about that. But as you could see, it ended up pulling back quite a bit. Then the next trade was SLRX. So when SLRX hit my scanner, I was like, oh, look at the float. 500,000 share float. Similar price range as the others. This one, let's see what we get. On this one, as you could see, another rejection. So I jumped in this at an average of, I think it was $1.95. So it was like right in this area, and I was adding as it was squeezing up, and it goes all the way to 220 and then jackknifes right back down. And I stopped out more or less break even, $200 of profit, but kind of a close call. So now I'd had my first close call of the day, and I was like, all right, we got to be a little bit careful. So that was at 8:20. And at that point, I then didn't take any more trades until 9:34. 9:34, I take my first trade on Silo, where this one is popping up right here. And I bought this dip at 285 and took profit as it popped over 3. It dropped back down and it came back up. And the thing that I'll note about this is that look at the volume on these red candles. High volume selling, high volume selling, selling, and high volume selling. So I thought, no, this doesn't look good. I connected a trend line right there, and I said, we've clearly got some resistance on this thing. I'm just not feeling it. So trend line connected between these two red candles, and connected on the bottom, ended up connecting it a little bit further ahead, like right in here. So actually interesting. Yeah, no, that's probably fine. So just wanted to see how it looked if it was the other way. So I was honestly surprised when SLIO curled back up. When it curled back up right here through 330, I was surprised up to 40. And it tried to get over this yellow line and then rejected back down. And then it came back up, rejected, came back up, rejected. And I was just like, you know what? Look, you're sitting at $3,000 on the day. This is a pretty solid day. Let's not push it, right? Why push it? You know, this is choppy. It's just something weird about it. And then next thing you know, it breaks 350 and squeezes right up to 370, right up to this yellow line. It dips down and then it breaks above it, goes all the way up to 340. But then it drops back down. It tries to hold this level. And I said, if it can hold this level, we might curl back up and maybe we got something to work with. But it broke it, came all the way back down to the support of this yellow line. And now it's coming back up, but we're sort of in this channel here. So anyways, I do feel like I left some money on the table, and I probably could have had a nice trade on this in that area, but I decided to walk away with money in my profit. Money in my pocket. Took some profit away, and I left some money on the table. Well, that's all right. That's the way it sometimes goes. So this might have more in it, but honestly, 2, 4, 6, 7 green candles in a row, that's a pretty impressive move from 250 up to almost 450. So that was Silo. And then I had one trade on NAAS. So NAAS, this one was kind of interesting. And I also have a couple other stocks I want to mention in a second too. But so NAAS, this one, a little bit of resistance up here on the daily, high volume candle here. It's been rallying up on pretty like light volume selling, high volume buying. So a nice daily chart there, but I don't know, just like a little funny. So it ended up halting up, and I bought the dip and the rip up to the next halt level, and then it ended up dropping. So I only made $156 on that one. And what I kind of said at that point was like, look, my winners seem to be getting smaller, right? That was a really small winner, and I just thought, well, yeah, let's not push it. It's just not worth it. Now, I did have to restrain myself a little bit on SDST because this stock, look at this, holy smokes. Okay, so this stock was actually looking decent pre-market because yesterday we had this huge move right here where we go from $12 up to 28. We pull back and then we're going sideways here. We dip down. We rally back up, and pre-market right here, it starts to go, and then it punches all the way up to $28 a share. I did not chase it. I restrained myself, and the reason was because the volume was too light and the spreads were too big. And thank goodness, because it dumped from 28 down to 24, halted down, opened lower, and goes all the way to 20. Oh, gosh, what a sell-off. So that was pretty nasty. If you see the 5-minute chart, it's a little easier to sort of visualize. Nice green move up, sideways, a little gap down after hours, Pre-market kind of started to pull away, dips down, squeezes up, and then huge red rejection candle. It is unfortunate that rejected as hard as it did. Rejecting, I guess, off the double top sort of from yesterday. But I just had this feeling like the volume is just too light and the risk is too high. CETU, this one yesterday put in kind of a big move as well. Both SDST and CETU are recent special acquisition companies. So trading sideways around $10 a share and getting a little bit of attention. I think the reason CETU squeezed is because SDST squeezed. But anyways, I think that if you ask me, when is my next chance going to be for a big winning trade? I would probably say next week. Tomorrow is Friday. It's the end of the week. I usually don't take a lot of risk on Fridays because I don't want to screw up a good week and take too much risk on a Friday. Given that yesterday and today were a little slower, I'm probably also not going to be inclined to take a lot of risk going into tomorrow. So, look, we may end up seeing something nice. It's possible we'll get a wild card stock and I'll end up getting my cushion and I'll be in great shape for Friday. But I sort of expect that I won't have another big day till maybe like Tuesday or Wednesday of next week. Monday, if you have something that squeezes up, that can trigger some FOMO and momentum in the market that then gives us some good opportunities on Tuesday and Wednesday. This week so far, Monday was the best day of the week, but you never know. So that certainly could happen. But I just sort of am thinking that for next week, again, today, Thursday was a little slower, today's a little slower. Wednesday was a little slower. Tomorrow's Friday. Don't know what we're going to get. Again, Silo, it is up 75%, so it's not bad. But in any case, so I've got 9 trading days left for the month, 3 of this final week, 5 next week, so 8, and then 9 right here for Friday. So I'm sitting at 73,000, but then plus today's 76,000, so almost 77, I guess. So really, I'm $22,000 away from kind of my goal for the month. And I don't usually get super fixated on like trying to hit a number. I don't think that's honestly super helpful because the market will give you what it wants to give you. But on the other hand, I think the area that it's helping me a little bit right now is the fact that I don't really have to stretch to hit that number. In fact, if I can have the patience and discipline to keep risk in check, I have a better likelihood of hitting it than if I try to like really struggle. And so that's it's almost like, to be honest, just crossing 100K would be less than if I hit my daily goal for the next 10 days. And so that's sort of changing my perspective from trying to take a lot of risk and like stretch to just like stay focused, hold it together. It's kind of like, if you've ever done like competitive sports or something and you're in the lead and it's like, now I just have to pace myself and maintain where I'm at. And that's a good feeling. It's like, all right, I've got this in the bag. All I need to do is just hold it together, pace myself, and I'm going to cross that finish line. And that, I think, encourages discipline, right? Because now you're just kind of grinding. And so I feel like that is healthy. So, it's sometimes when traders, will come to me, they'll show me their metrics or something like that. And I'll see, let's look at year to date for me. So year to date. So let's look at what my number is. So right now I'm at 390,000, averaging $3,000 a day. So, let's just say, for instance, there's a trader that I see this all the time. Let me try to paint the picture. So the trader's struggling to hit $100,000 for the year. So we'll just jump on the whiteboard. So their goal is to, try to hit 100K for the year, right? Now, typically I would say, well, you got to be averaging 400 a day to hit 100K, right? 250 trading days, right? So, but the problem here is that, let's just say their daily goal is 1,000. And they're trying to hit $1,000 every day. And they're having a lot of days where they're hitting $1,500, $1,600, but they're also having a lot of days where they're going red $2,000 or $3,000. And sometimes for traders like that, it's like you actually would have a better chance at hitting your goal on the year if you set your daily goal a little bit more modest. How many days are you actually up $400, $300, $400, but you don't take it off the table, you push and try to get more, and then it's gone. So in that regard, I think it can be helpful to bring that goal down a little bit and to adopt the discipline like I had today, that once I hit that number, I say, you know what, I'm going to walk away. Now, there is a point in your career where you'll get better at leaning on and, stepping up and being aggressive when the market's hot. But as a beginner, I think it's really a big confidence booster to hit that $50, $100, $400 number and walk away. Hit the number, walk away. Hit the number, walk away. Hit the number, walk away. And you kind of get very sort of linear about it in the way you think of it. Like, I walk away when I'm at this number positive. I walk away when I'm at this number negative. And that's just like, it's a level of discipline that's really good. By the way, I see Silo now up 80% here. So pushing a little bit higher. You've got your high a day up here around 35. And now this yellow line has moved up. So if you get a pullback here, this is kind of an interesting trigger where you could get a curl back through and you could maybe pin to a halt up level. But I would also just think back on the price action we saw yesterday. Oh my gosh. So LCFY. So LCFY yesterday, this was like, some of us had some real close calls on this because this thing looked decent. And then all of a sudden, look at that rejection. It's like that flush, right? This is kind of that similar time of day where I'm just worried about seeing that kind of drop. So when I see something like Silo, speak of the devil, right? So this is what I'm talking about. Look at that, right? So it starts, it's that little sort of sixth sense that traders start to develop if you've been here for long enough. And the thing that's really tough is that, look, sometimes that'll end up halting up. It's halted up at 475 and you're like, shoot, I missed it. I talked myself out of it. Darn it. I wish I'd had the conviction to, but something about it was funny. And I'm glad you guys kind of saw that. I mean, you didn't see this in real time, but it basically just did exactly what I was kind of afraid of. So came up through that level and then rejected. It's just, I don't know, there's something about maybe this time of day, and we've already had kind of the big move, and this is sort of the backside. The MACD's crossed over, a little bit of inherent weakness on some of these candles. And this is where I think market makers and these algorithms just really take advantage of traders. So don't overstay your welcome, right? So book your profit, get in, get green, and get out. And so today I did that. I think I did leave a little money on the table. I probably could have stuck it out a little bit longer, but anyways, Silo, just wasn't what I had the thought on, that it would give us a parabolic move. It did more than I expected. And maybe in part that was because today we didn't really have anything else that looked that great. So it's kind of like by default, it became the best of what was available today. On a normal day when we've got some really good action, it probably wouldn't have been, but today it worked. So look, and I would also say that example right there, I wish I had been streaming for Warrior Pro members still. I'd stopped a little earlier, and I have a hard stop today. I've got to take off. But when I'm streaming, that's the type of commentary that could be so beneficial for a beginner who's sitting here watching and is like, oh yeah, this looks great. And then to hear that kind of, second opinion, take it for what it's worth, but it's educated intuition, and I think it's valuable. So, hey, I'd encourage you guys to do a 2-week trial at Warrior Trading. There'll be a link pinned to the top of the comments and linked in the description. And if you enjoyed this recap, I hope you hit that thumbs up and are subscribed to the channel. And I will see you guys for the next upload tomorrow. My recap hopefully will be finishing the week in good shape. Doesn't have to be a big green day, just holding it together to finish the week strong. So as always, manage your risk. Trading is risky. My results aren't typical, so take it slow, and I'll see you guys back here tomorrow.